Let us now commence this module by discussing about the Accounting Information System. An Accounting Information System AIS is a system of collecting, storing, processing and communicating financial information that can be used by decision makers. This system must ensure that the reports are timely so that decision makers are not acting on old and irrelevant information. Accounting must be understood as a system of information that measures the activities of a firm and processes this information in such a way that it is easily communicated to and understood by the final users. It must allow these users to make value judgments about the financial situation of firms and organizations and also about their activity in order to make informed decisions regarding their future. Consolidation is one of the features of Accounting Information System, as users don't have to look through an enormous number of transactions. Accounting is a specialized function of management which includes collection, recording and analyzing financial data and presenting statements and financial information for all types of users. The information system is defined as an integrated set of methods, procedures and means used in order to collect, transmit and process data, analyze, store, disseminate and capitalize information and knowledge. The Accounting Information System links the organization's important information systems and can present in monetary value terms. With respect to the above representation, we may say that the information system is the system whose objective is to provide information to its environment in order to control and adjust the subsystem's activity. There are accounting information of common interest, but also information that interest only a certain category of users, just as the Accounting Board of Regulation IASB, International Accounting Standard Board, admits that not all the users' requirements of information can be satisfied by the financial statements. However, an implicit manner issues that investors are privileged users. Therefore, satisfying their information needs will mean satisfying the majority of needs of other categories of users. The nature and quantity of information published depend on the offer of the manufacturers of accounting information and on the user's demand. The free market of information entails accounting normalization in that this market becomes efficient and available for possible users. After studying this module, you shall be able to know what Accounting Information System is, learn what the accounting process is, identify different users of accounting, know some limitations of accounting. Let us now understand about the approaches to accounting. Professors B.S. Nold and C.H. Horaro have identified in accounting the following paradigms. Inductive approach. This implies that the elaboration of the accounting theory is made through the generalization of observations provided by the accounting practices. Deductive approach implies the preliminary defining of objectives from which postulates, conventions, methods and accounting rules are derived. Predictive approach consists of testing accounting methods and rules according to their prediction capacity, thus facilitating the decision-making process. Behavioral and psychological approach. This approach handles the study of the individual user's reactions when the accounting information is published and lays stress on the relevance of the accounting information in the decision-making process. Economic approach. This approach considers the accounting information as an economic asset. Moving on to the users of accounting information system. The basic role of accounting is the transformation of objectively relevant information regarding the financial analysis of a firm into understandable statements that transmit the economic performance of a firm and its consequent financial situation. Accounting information is useful for many different agents that need to know the financial and economic situation of a firm. Agents can be internal. These are those users who are part of the firm and whose decisions affect the running of the firm. This includes the board of directors, the executive committee, the CEO, management, and the people who work for the firm. External. These are the agents who are not active participants in the running of the firm but are affected by the decisions it makes. We can further divide them. First, the stakeholders of a firm are agents who are interested in the running of the firm because the decisions they make are directly affected by the success of the firm. The most important stakeholders of a firm are its shareholders and potential shareholders, and also include its creditors, employees, suppliers, client, the government, and the competition. Second, any other person who is interested in analyzing the accounting information to find out about a firm, such as professors, researchers, or undergraduate students, etc. The accounting information system allows a manager, internal and external users of accounting information to obtain an insight into the entire organization and take informed decisions. The dual representation of the reality of accounting information in the accounting information system, internal and external, renders the image of the organization on the outside through financial or general accounting, and on the other hand it renders the internal processes through management accounting. Management accounting system is designed to meet the internal needs of the organization, but the two systems need to be combined so they could ensure the integrity and accuracy of the information produced. Financial accounting has the role of recording and transactions with the external environment in order to periodically and systematically determine the financial situation and results of operations performed. The financial accounting information are retrospective and are made public according to effective legislation. Management accounting produces the majority of information needed for decision-making process. The information produced by the financial accounting is part of the economic financial analysis, and they shall contribute to the basis of the managerial decision. The management accounting does not act for the communication with the organization's exterior. Thus, it's not normalized, and it is an instrument of modeling companies that comes at the hand of managers in the complex processes of leading the organization, an extremely efficient instrument with internal character. The financial accounting information system provides managers the financial accounting information on which the formulation of politics, the development of business plans, and the control of activities within an organization are based on, and has the purpose of responding to the external legal requirements and to some accounting standards. The information system is an important integrated part in the ongoing development of financial economic processes of any organization, which is influenced by a series of internal and external factors. Knowing this requires a detailed analysis of the component of such information, nature and origin, the significance and utility, the path they cross and the transformation they suffer in the process, their purpose, the material base on which it is recorded, the means of collecting, processing, etc. Accounting and social economic environment in which this operates mutually interacts, thus being in an interdependence relationship and influencing each other. Considering the fact that the country's accounting system is influenced by a series of factors such as legal system, dominant way of funding organizations, tax system, inflation level, economic, political system, etc., generating differences between countries' accounting systems. Although steps are being taken so that the accounting practices across the globe gets harmonized. Adoption of IFRS International Financial Reporting Standards is one of them. We shall now understand the process of accounting. First, it is necessary to collect all the relevant information that justifies some kind of transaction that the firm is party to. It is very important that each transaction is supported by a valid document such as a check, a receipt, and invoice. Once this information is available, it must be treated in such a way that it can affect the net worth of the firm. This is why it must be measured in monetary units and posted to journal and ledger and classified according to the GAAP, generally accepted accounting principles. Once this has been done, the firm can then create its financial statements, which will reflect the economic and financial position of the firm in a clear and concise manner that allows it to be easily understood, communicated, and analyzed. Now the question is, what constitutes financial statements? Moving on to the financial statements, refer to the following statements. All firms must prepare the following financial statements. First, balance sheet reports the financial position of a firm at a given point in time. Second, income statement reports the income of a firm during a given period, separates operating income from financial income. Third, cash flow statement reports the source and use of the liquid cash of a firm. It is separated in operating, financial, and investment cash flows. Fourth, shareholders' equity statement reports all of the changes in the shareholders' equity of a firm during a determined period. Fifth, disclosure reports the criteria, principles, and rules that have been followed to create the balance sheet and the income statement. It also provides other important information regarding the firm that is needed to better analyze and understand the other financial statements. We shall now understand the basic requirements. Accounting information must meet some basic requirements to ensure that it is useful in the decision-making process. First, relevant. The information must be significant and aggregated to facilitate the decision-making process. Second, timely. It must be available at the right time, not before and not after. Third, reliable. It must guarantee a minimum level of quality so that the users can be confident in the data. Fourth, comparable. Despite the difficulties, it must be possible to compare the data between different firms and different time periods. Fifth, understandable. It must be presented in such a manner that it is easily understood by the users. Sixth, affordable. The cost of researching and presenting the information must not be higher than the benefits derived from using it. Taking into consideration the role and functions of the financial accounting but also those of the management accounting, we may say that these two information components are complementary and facilitate the efficient, effective, and economic management of an organization. Through the information they provide, these competing to the adoption of the managerial decision. Let us now understand that how restrictions need to be imposed in accounting information system. Imposition of some requirements that shall ensure the correctness and viability of information. A. Reality of the information regarding the way to conduct the processes within the economic entity, this requirement being correlated with socio-economic characteristics of the entity and the environment in which it operates. In this context, the quality of information is a defining element for the realism of their decision and for obtaining long-term economic performance, thereby achieving stability, sustainability on the economic market. B. Versatility of the information is generated by the complexity of processes and phenomena taking place within economic entities and should highlight the most important economic, technical, human or scientific aspects. C. Concession and the synthesis capacity of the information. This being imposed by strict selection of the most significant information in terms of degree of novelty and importance to the entity's activity. D. Accuracy and safety of the information requires a proper identification of the newest and most essential elements. Also, the nature of the information must be concise, synthetic and multilateral. E. Opportunity of the information implies its use in appropriate time, and this requires knowing the recipient, reaching him in time and triggering the action concerned. F. Efficiency in treating information is directly imposed by the adoption and implementation of decisions. Since however valuable an information is, if it reaches the recipient after the processes has already begun or has been completed, such information becomes obsolete. G. Dynamism of the information required by the shortening of operating time, by the compression of the management process, and especially by the need to reflect the developments of work processes and predict their evolution. H. Adapting information to the specific staff involved so that they are presented according to the level of understanding and qualification of each beneficiary. I. Efficiency of the information involves a result evaluation of the transpositions information in decisions. J. Reliability of the information refers to the availability of information in relation to the coordinates that are of interest to the decider. K. Adequacy of information to the needs imposed by that hierarchic decision making level. Moving on to the limitations of accounting information. Although accounting information suffers from some limitations, it is the only system that exists that can explain the performance of a firm or organization and is therefore often referred to as the language of business. Some of the limitations include: first, qualitative factors are not reflected. For example, it is not possible to measure how good a worker or manager is. It may be possible to deduce this from its performance, but this is not always true. It is sometimes necessary to estimate data when concrete figures are not available, but this also makes the final outcome less objective. Second, there are many different methods to measure the assets, liabilities, revenues and expenses of a firm. This makes it difficult to accurately compare information. Third, changes in price due to inflation also makes it more difficult to guarantee accuracy. Fourth, accounting information is based in the past and it attempts to report the current position of the firm. Any information regarding the future is merely a projection. Let us now recapitulate what we have learned so far. In this module, we have studied what is accounting information system. As we have seen, accounting is the language of business and main role of accounting information system is to provide information to the users of accounting which can be used for decision making purpose. Thank you.